Hello, everyone. I'm Matthew Goldberg, member of the Cebu Board of Governors and a consumer banking reporter at Bankrate. On behalf of Cebu, welcome to today's webinar on covering crypto. We have a great moderator and panel here today. Our moderator today is Jacob Goldstein. Jacob is an NPR correspondent and co-host of the Planet Money podcast. He is author of the book, Money, the True Story of a Made-Up Thing. Before coming to NPR, Goldstein was a staff writer at the Wall Street Journal, the Miami Herald, and the Bozeman Daily Chronicle. Joining us as panelists today are Mark DeCambre, MarketWatch Markets Editor. Mark covers crypto and blockchain intermittently, while also looking after a team of reporters chasing up stories on assets, including stocks, bonds, and gold. He formerly worked for Quartz, covering the financial sector, and before that, worked as a Wall Street reporter for the New York Post and TheStreet.com. Olga Kharif from Bloomberg is also on the panel. Olga has been covering Bitcoin and other cryptocurrencies and related technologies for Bloomberg News for 8 years. She's covered the boom in initial coin offerings and more recently, the rise of DeFi or decentralized finance. Before covering crypto, Olga covered technology for Business Week. To our listeners, if you have a question for the panel, please drop it in the Zoom chat. Those questions will get to Jacob and he'll be posing them to the panel. Also, feel free to use hashtag Cebu on Twitter. With that, I'll hand things over to Jacob. Jacob?
Hi, thanks. Thanks to everybody for coming. So I think we're just going to talk for just a couple minutes at the beginning and then answer your questions. And the thing I wanted to talk about, I wanted to sort of zoom out from day to day or week to week coverage and try and really briefly do kind of a long arc of crypto, basically the history of crypto, and kind of make up maybe 3 eras, I'm going to say, of crypto. The first one starts all the way back actually in the 1980s. There is this long sort of prehistory of crypto that I have written about, I find particularly interesting. And part of the reason it's so interesting to me is because these really smart technical people who were basically trying to invent crypto for 20 years or so were super radical. They were basically radical libertarians. And there's this manifesto that one of them wrote, the Crypto Anarchist Manifesto in 1988. And it lays the groundwork for a lot of stuff that is familiar today. So I'm just going to indulge me. I'm just going to read a couple lines. He wrote, they called it crypto anarchy, but it's really cryptocurrency is what they're trying to invent. He wrote, it will allow illicit and stolen materials to be traded. An anonymous computerized market will even make possible abhorrent markets for assassinations and extortion. Various criminal and foreign elements will be active users. So, this is whatever now, I don't even know, 30 years ago, yeah, that this sort of groundwork for the kind of ransomware stuff we're seeing now is being laid. And I really do think, in the early days, you have the Bitcoin white paper was 2008 and Bitcoin sort of is creeping its way out into the world. The first time most normal, non-technical people hear about crypto, it is very much in this crimey setting, right? I mean, Silk Road was 2011. I think that was the first big sort of pop. So that's the era number 1 to me. And then you have this big shift that a little bit after that, you can date it to 2013 if you want to be overly reductive. There was this, the first congressional hearing about Bitcoin, which you might have expected given the context to be very critical and, Chuck Schumer had been very wary of Silk Road and Bitcoin up to this point, but in fact it was not, right? By this point, Bitcoin had sort of moved away from its kind of anarchist radical roots and been embraced basically by Silicon Valley, right? By people who saw it as a way to make money, to have financial innovation as a kind of financial internet. And so you have that era starting then and running arguably until now. And so to me, the interesting, big, long arc question about Bitcoin and really now more generally cryptocurrency is, are we on the verge of a new era? And if so, what's it going to be, right? Is it going to be a return to the crimey roots, right? Which was the sort of ransomware story that we've been hearing about more in the past few months. Or is it going to go the other way? And is somebody finally going to figure out, you know, a real killer app for crypto that lets ordinary people use it all the time, even if they don't notice it, for remittances or for payments or something? Because I think ultimately the striking thing to me about crypto at this point is it's been around for so long, there's so much money in it, and yet it's not really useful for ordinary people yet. Olga or Mark, you guys want to make some just brief remarks?
I'm happy to jump in if Olga is gonna go after. But yeah, so you know, I think what you say is absolutely right, Jacob. This is a big question about what all this means in terms of the evolution of crypto and where we are now in this evolutionary cycle. From my perspective, and I think probably I'm hoping that other people have come to this to learn a little bit about how some of us, and everyone will have different opinions, but how some of us think about covering the space. And I think that's really where we can probably add the most value, because I'm not going to be able to tell you whether or not you should buy Dogecoin or Aave or whatever, but we can, talk about, how this is evolving, and this is either going to be sort of a telling of a story, sort of like this spectacular advent of new money and new technology, or we're going to be, basically talking about how this is, the demise of crypto, and we're going to be writing the obituary of Bitcoin in sort of details. But I think the point that Jacob gets at is that, make no mistake, right now we're having this discussion because we've come to a state of maturation where the space can't really be ignored. Coverage wise, I think. Looking after crypto is like one of the more challenging things that you might do as a journalist. It's a very important area of coverage because it touches on so many different things. A burgeoning sector that's growing so ridiculously rapid that one would think that you'd want to treat it with some degree of skepticism, but it feels like the plane that's in flight is being built around you. So it's just has this very sort of hyperdrive feel to it, and also feels to some extent too, as we look at the economic landscape with central banks. We're in our second crisis, since the 2008-2009 financial crisis, and that really in some ways was the genesis of this modern era of crypto, as the historians of the space talk about with Bitcoin, and it feels like we're perhaps at another tipping point, driven by a lot of liquidity, a lot of concerns about devaluation, about hyperinflation, and really the global economy is really at the center of all this. It's not just a U.S. event; it's really a global event. So that also dictates how you cover this space. And right now we're talking about crypto, but we're also talking about digital payments, right? How money is moving from point to point, how quickly it moves. And a lot of folks have said that crypto, is answering a question that has already been answered, or solving a problem that hasn't come up. But there's a lot of innovation, a lot of folks that really think that blockchain and distributed ledger technology is really sort of something that will be integrated in a lot of different aspects of the market, really, of the financial market. So from a coverage standpoint, there's so many different areas to really look at. I'll just touch on some of them and kind of let Olga riff off of it. There's clearly the most headline, which is the price moves, which is something that we're constantly looking at, and also the assets, what's moving, Bitcoin, Ether, what are these things? What do they do? What's the use cases for them? Those are some of the questions that come up around average people, but certainly something that we have to highlight continually as we report in this in this space. Also, the notion of who are the players, who are the professionals that have started Bitcoin, who's Satoshi Nakamoto, who's Roger Ver. There's so many names, so many players out there that also play into the story of where we are now in the crypto evolution. Regulatorily, as Jacob mentioned, we've had a number of hearings down in DC, but that continues. It's hard to say if we're going to have a Bitcoin ETF, but that's part of the discussion. Another part of the discussion is, investor protections and how that plays out. And whether or not Gary Gensler is a friend to Bitcoin or crypto just because he taught it at MIT, we'll see that play out as well. Other notions like the DC, not just regulatorily, but the dollar, stable coins, central bank digital currencies, what do those mean? Those are other areas of coverage for the space. The remittance effect, El Salvador adopting Bitcoin more officially, the Wall Street players, the institutions that have come in, corporates that have started to coalesce around a Bitcoin strategy, Tesla, MicroStrategy, to name a few, the companies that are emerging from blockchain to hedge funds that are focused on crypto, this meme culture that's also emerging. It's not just a crypto phenomenon, but it certainly is one that's best reflected in that space as well. Trading platforms, market structure, cybersecurity, like Jacob mentioned as well, the concerns about ransomware. These are all areas that really in and of themselves could be separate little subbeats or subsectors for this space. So that's why I think it's one of the more challenging areas, and some or all of that we'll probably touch on to some extent as we discuss coverage of crypto. I know that was a lot, but I'll leave it there.
Mark, I completely agree with you that this is a super important, but also a very challenging area to cover. It's important because companies such as Walmart are integrating blockchain into their supply chain management, for example. And a lot of people believe that blockchain will change the way financial services are provided. But at the same time, and I've covered all kinds of areas of technology before jumping into crypto, I found this to be by far the most challenging area to cover because there are so many sort of shady things going on here that as a reporter, I think it's very important to be aware of. We all know about Bitcoin and Ethereum, but there are about 11,000 different coins out there that people are investing in. And, a lot of this are, kind of scams and kind of questionable endeavors. And basically you have to get into the nitty-gritty of how each particular coin works, as you write about this market, as you write about these different coins to essentially make sure that you are not, you're not helping, scammers to, to spread the word about their scam. And, some of the things that I've encountered was that, a lot of startups may tell you, a lot of this coin-related startups may tell you, well, Google is one of our partners, for example, and then you call Google, and I find that you need to really check on every partner they mention, and everything they tell you, you have to double check. For example, you call Google and they tell you, well, they're using our cloud services like a lot of other companies do. We have gone through this market, as Jacob has said, has gone through so many different evolutions. And, a few years ago, there were initial coin offerings where any startup could issue a coin for a project. And, they raised billions of dollars of funds, but most of these projects actually never came out with the product, and investors lost all of their money. Right now, we are in this phase where decentralized finance applications are all the rage. They're offering amazing returns, double and triple digit returns. And kind of what maybe some of these investors in this project are not aware of is that, you know, the money you put in could also very well go to zero because there are all kinds of hacks happening, or sometimes the founders of the project, the developers of the project just kind of abscond with the funds or do something to make the value of the coin go to zero. There are so many problems, and the SEC and other agencies have gone after a lot of companies in the space, but it's such an innovative space, such an interesting space. I mean, they're not able to keep up. And you know, a lot of decentralized finance companies, for example, believe that regulation, current financial regulation, does not apply to them, and which is not the case. And as a reporter, you have to be able to explain to the reader all of these nuances, that there are, you know, a lot of questionable practices in the industry. There are a lot of risks, and you know, it's also very important to research all the people behind each project, because you know, as Jacob has said, you know, a lot of the first people to become interested in crypto were, you know, not your sort of typical tech entrepreneurs. Some of them actually have criminal background, and you know, this might be sometimes relevant to the story that we might be writing. So so I agree with this sentiment that there's a lot of challenge. It's pretty challenging to cover this sector.
I think I'll just add to what Olga is saying by noting, I don't necessarily think you have to change your approach to covering this space, because there's the, you know, risk and the possibility of scams. I mean, I think that's the case with every segment of the market that you look at. Folks should be checking their sources and double checking sources and making sure that their contacts are verified and that the news that they hear is verified. You know, it becomes more reinforced as you interact in this space. But I don't think it's necessarily something that you need to change or alter. And like with any, you know, new segment of the market that you're covering, you're gonna have to build out sources and test them over time as to how, you know, trustworthy they are. In terms of what Olga said, you know, you need to do your research, and in order to kind of discern whether or not you're being, you know, hoodwinked by people, you need to know what's going on. So a lot of coverage of this space requires getting up to speed as to the terminology, getting up to speed as to where to check sources on, you know, different parts of you know, the market, and making sure that, you know, you feel comfortable using someone as a source, or using the data that is being proffered as reliable. So those are important things, but I think that's also kind of in the same vein as covering the market, or covering news generally speaking.
There was something, Olga, that you mentioned a couple minutes ago that I think might be worth going back to just for a moment. You were talking about decentralized finance, which, you know, when I hear that phrase, I think, oh, interesting, blockchain, blah, blah, blah. But I feel like at this particular moment, it has, for people within the crypto world, a much more specific meaning, which is basically these various ways that people can get quite high returns, high rates of interest, right? So this is not buying a coin and watching its price go up, but rather deploying some cryptocurrency in some way that gets you, you know, 10% interest, which obviously is an insane interest rate right now. And I feel like that's actually a story that hasn't quite like jumped from the sort of crypto world fully out into the kind of mainstream world. And so might be of interest to the audience today. Can you just talk a little bit about sort of technically how that works? Like what is actually going on there?
Sure. So the idea in decentralized finance is that people are using software applications to trade, you know, borrow and lend money to each other without any intermediaries like banks. They just do it directly or through, you know, certain apps essentially that are set up for this purpose. And kind of the idea is great, right? You can potentially borrow, if you're a startup, you can borrow money. Perhaps if the bank doesn't give you a loan, you can borrow money through this app. But what's emerged over recent months is that actually people are essentially using these apps to make pretty high yields on the coins that they hold. So they might convert, the way this might work is this. So for instance, you might use your dollars to buy Ether. And then you deposit this Ether into an app to be lent out to other people. And for this, for lending your Ether, you might be able to, you get the coin of that app, and you get a certain interest, percentage interest for lending this money. Then the person who just lent their money might also borrow from the same app and lend that same money again. And so it's kind of like it's a multi-layer kind of a scheme where people are, you know, able to make triple-digit returns. And you know, it's extremely risky because some of the coins involved, I mean, they're even more volatile than Bitcoin is. And Bitcoin is highly volatile, and Ether is highly volatile. And so it's, you know, some people make money, some people lose a lot of money.
Great. There are some questions coming in. Thank you for submitting questions, and please keep submitting questions. Mark, let me throw a couple of these to you. There's two that I'll sort of bundle here. They came in together. They're basically sourcing questions. So one is, what are some of the best ways and places to find retail crypto users to bring the story down to earth? There's also implicit there is there anybody who's really a crypto user at all? Or are people just buying and selling? And then sort of similarly, are there any good academic sources for crypto stories? Mark, do you want to just take those two as a bundle of sort of sourcing in crypto, both on the ordinary person side and on the academic side?
Yeah, absolutely. And I just want to add to what Olga had said earlier, that DeFi is one of the more fascinating areas of crypto as well, because of the borrowing and lending, but primarily because of the notion of decentralized finance. I mean, disintermediation of the financial system is a really fascinating thing when you think about it. You know, knocking out the Wall Street brokers, knocking out the brokers who are selling you mortgages. If you extrapolate what DeFi could be, besides this notion of high yields off of, you know, your staked coins, whatever that may be, we're talking about real threats to what is perceived as the ingrained financial system, and that's going to be, as that develops, we'll see crackdowns on, you know, some of the things that Olga mentioned, but also a possible convergence in terms of, again, if this thing matures on the trajectory it looks to be, you could see some more integrations of DeFi applications in traditional finance for, you know, buying and selling things, for trading securities, for trading traditional securities, as well as for trading crypto. And again, just you know, pure extrapolation, but
I will say, just before you answer the sourcing questions, like, it is striking to me with DeFi, and it's sort of a microcosm of crypto as a whole. It's like, yes, like disintermediating finance, like very reasonable thing, right? Technology does disintermediation. And yet the thing that's actually happening is this weird kind of hermetically sealed, like crypto to crypto, and you're borrowing crypto to buy other crypto. And like, it never gets to the real world, right? Which to me is like the most salient part of the crypto story, right? It's like all this money going around in circles and not ultimately being useful in the way that finance can be useful.
And we're not quite there yet, because there are components of that make, you know, the more you use some of these platforms, the higher gas fees, and the slower the process becomes. A lot of these platforms run off of Ether. So those things need to be solved. Currently, a lot of that stuff is solved off-chain, which is a solution, but doesn't really solve the problem entirely. So we're still in that evolutionary process, and I think there's lots of different ways to make yield that aren't necessarily DeFi, but DeFi has become associated with it. But I just wanted to throw in the notion that when we think about DeFi, DeFi is also a possibly revolutionary category, and one that does carry a lot of risk with it as well. But if you were to ask me, like, where might gains be seen in this segment of the market, and I would say DeFi is certainly one area where you'll see possibly some convergence of technologies and folks starting to try to onboard DeFi type platforms. So, but going back to the other question, so a number of institutions, universities, have already started to because universities like to make money. So from MIT down down the chain, you can see, you can kind of do your research and check to see who's doing blockchain as a course, or doing crypto, and you can find many academics, Carnegie Mellon, that cover this space and can give you an academic look at things. There's also some platforms that will allow you to look at some of the research, and you can kind of just chat and develop relationships with some of the academics around that. And as far as getting to retail sources, the same way you would in any other way. I mean, I think the technology today makes it somewhat easier to source out retail or individual investors, because you've got Reddit, you've got Discord, and if you can kind of contact those people, you can verify them, chat with them, and figure out whether or not there's a story to be had that can play out to represent what's going on in the marketplace, whatever your narrative might be. So that's some of the strategies I've employed, and maybe Olga has some others, but I think those are some good ways to get at the academic route, because I think more and more institutions are coming around to covering the space from an academic standpoint, and also from the social media standpoint.
And kind of to add to what Mark just said, in terms of where I find regular crypto users, I actually mine Twitter a lot, because most of the important conversations on crypto happen on Twitter. This is kind of where a lot of the price action is being discussed. This is where the crypto influencers hang out. So that's what I personally use. And in terms of academic sources, like Mark said, MIT is great. I also really like John Griffin from University of Texas at Austin. He wrote a very important paper about sort of his thoughts on how Bitcoin's price was manipulated in 2017, and he has a lot of kind of, I feel like, deep insights into this market. And just to come back to what Jacob mentioned about, what exactly is crypto good for? I think that's such an important question that a lot of people are trying to find an answer to right now, because obviously, I think years from now, like Mark said, decentralized finance is going to be, something else than what it is today. For example, it's going to be, a whole. The financial industry will be reinvented using decentralized finance. But if we look at what crypto is being used for today, it's not very much used in payments, for example, paying for goods and services, because it's so volatile. And so, there is such a category of coins called stable coins, which don't change in price very much. They're used in commerce, but in a very limited way currently. So the majority of the market is just pure speculation at this point. So there's a lot of promise, but I think it's yet to be sort of realized at this point beyond speculation.
Somebody's just asking about Iron Titan, that was like the stable coin that just blew up, right? Is that what that is? You were just mentioning stable coins. You want to just keep going and answer that one if you know it off the top of your head? The question is, What happened with Iron Titan? Good, tight question.
So, I think this was, if I'm not mistaken, I think this was one of those examples where sort of the investors into the coin were left. Without kind of jumping into discussing this particular situation, so there are several ways in which people can lose money on stable coins. One is where some stable coins have mechanisms within them that when there are fewer users of the stable coin, when the usage of the stable coins fluctuates, or any coin in DeFi fluctuates, the usage, that can impact the supply and the price. So with stable coins specifically, the price is supposed to stay the same, but what can happen is that the developers can do something to a project and basically drain it of funds, or there can be hacks as well. So, I think this week, a lot of people are paying attention to what happened with Whale Farm, for instance. Essentially, developers drained it, kind of drove the price to zero by selling a huge chunk of their stake. And so what I find is that people who are sophisticated users of DeFi, they actually themselves audit the code of each project that whose coins they invest in to make sure there are no loopholes, for somebody to do something bad to the project so the price goes to zero. But sometimes, and you definitely need to know what percentage of the coin supply the developers and the founders hold, because they are kind of probably going to be the biggest holders of this coin, and they can impact the price in a big way.
Great.
Yeah, I mean, net iron tokens seem to be a not a great protocol, certainly not a great design protocol, and didn't seem as if Mark Cuban did a lot of great research on that project. And that happens. I mean, that's kind of a sign of what can happen when you don't pay attention to how your project works. I mean, a lot of people say, read the white paper. I mean, there were loopholes in this that resulted in, I guess, a flooding of tokens that upended or destabilized the asset, and that happens. It happens in traditional markets, right? Markets during 2008. We had funds that were meant to be similar, in nature, breaking the buck. So those things happen, and you need to understand the mechanisms of which is kind of to the other point of reporting in this space. It's important to kind of know what kind of market structure we're working with, because the market structure of crypto can be pretty complicated. So you need to be up to speed as to what's going on, how it's impacted, and be able to kind of distill that to the average reader to say, hey, this is what happened. And I think, this is probably not going to be the last event, where you see a blow up. And obviously we've seen many, but I think the integration of crypto into a lot of different places. Olga mentioned Walmart trying to integrate blockchain into their, maybe inventory or systems. There's Tesla with Bitcoin, and different companies looking to looking at crypto from Bitcoin to other assets, and we're going to see more of the ramifications of this convergence of old school and new school, and that's something from a reporting standpoint that you need to be prepared for, and you need to be, that's the level of skepticism where you say, well, what happens if things go pear-shaped? How will I report this? So you have to plot some of these things out. You can never plot everything out, but understanding things that you don't understand early will be helpful when you need to report on them. Because if something's complex like DeFi or, Polygon or whatever, then you better get up to speed, because if there's a story around this that requires explanation, you're going to have to be able to articulate that story to the masses.
So let me grab a couple of questions here and sort of bundle them. Maybe you guys can take them one in turn. So one of the questions is, somebody's writing from Canada. Welcome, Canada. I'm in Canada, where regulation efforts around crypto are ramping up. What countries are farther ahead on crypto regulation and could offer clues around how things will play out elsewhere? I mean, I don't know if, Mark, do you want to take that one? And then Olga, if you want to follow, there's a more specific question that's also fundamentally a regulation question, which is, when will we see a Bitcoin ETF launched here in the US? Many have failed, but will the SEC and FINRA allow it? You guys want to take those in turn as sort of our regulation bundle?
Yeah, I mean, I'll just jump in. I'm sure Olga has some great insights on this. I don't know the clear answer to that as far as which country is the most friendly to crypto, but I suspect, as we look at India, as we look at the UK, as we look at China, large economies aren't necessarily keen to be destabilized by crypto, and if they are going to be destabilized, like for instance in China, they want to be the ones doing the destabilization. So there's going to be a lot of pushback on that front, and there's going to be this sort of and again, which is why, from a reporting standpoint, getting your ducks in order in terms of covering DC and covering regulation is going to be critical. Like, who's against it, who's for it, and how is that playing out? Because at the same time, even when you have certain places that are more friendly to it, and there is a country that is pretty, I don't know if it's Thailand or one of those places that where they've invited people to come and set up their crypto platforms. But nonetheless, there's going to be pushback from governments, and there's going to be sort of this notion, even as we sort of and if we emerge from this, that level of resistance, a level of trying to control the process in terms of putting up gate rails, guardrails, to make sure that investor protections are there. And that's kind of the key thing. It's probably the key thing for the ETF to come to pass. I mean, there's two things I would say that are preventing an ETF, a crypto wrapped ETF, is one, being able to value Bitcoin, to replicate that value. A lot of regulators are finding that tough to do, because that's an important thing for them to understand how the asset works. And the other thing is making sure that that there are investor protections in place, and that the market can't be easily manipulated by a handful of whales. So those are some of the impediments I think, as far as an ETF, and also kind of just touching on some of the questions about headwinds regulatorily outside the country.
And just so I completely agree with Mark. So the reason we have not had an ETF so far is because the SEC said they're concerned about the potential for market manipulation. Essentially, for instance, if you look at Bitcoin, a few big whales control a huge percentage of supply. As a statistic that I got was that, currently less than 2% of accounts control 95% of Bitcoin supply. And of those 95%, exchanges are just like 7%. So some whales whose names are not even known in a lot of cases own the majority of the supply, and then there are the small kind of retail fish swimming around trying to make a buck. But really, it's those whales that control everything and can make the prices go up and down hugely. And so a few years ago, the Winklevoss twins, who've been in Bitcoin since the early days, they of course are known from the history of Facebook, but they've been kind of big supporters of crypto for many years. So they applied for an ETF, for a Bitcoin ETF years ago, and got rejected. And the SEC cited the potential for market manipulation in Bitcoin as the reason that the market is not ready for an ETF. People I talked to kind of just earlier this year said that an approval for a Bitcoin ETF could happen as early as late this year, and this would be the impetus for the next market rally. But I think more recently, people are becoming more skeptical that this approval will be granted, because even though there are a lot more entrants into the Bitcoin market, it's still, the situation is not radically different from what it was a few years ago. It's still, the same thing, where a few whales are controlling the vast majority of supply. SEC's Gary Gensler has indicated that he wants to tighten regulation around Bitcoin on US cryptocurrency exchanges. So we have to see kind of what that looks like. And I think maybe this, regulatory action has to happen before an ETF is even considered. Currently, I think there are something like 12 applicants for a Bitcoin ETF, but right now I think it's the chances of approval this year, to me at least, they look pretty slim. And on the regulatory front, it's an interesting situation, because we have a new administration here in the US, and like Mark said, we still have to see exactly how Gary Gensler feels about the space. It's one thing to teach about it, another to create regulations around it. I know that in Canada, obviously, that's where Bitcoin ETFs already exist. So I think regulators there are friendlier to crypto. But I think I only see kind of the tightening of regulation here in the US.
Somebody's asking a sort of quick follow-up to that. What's the Grayscale Bitcoin Trust? How does that structure differ from a true Bitcoin ETF? So either you guys want to answer that? I don't know the answer. I'll be candid. I don't know. Does either of you guys know?
Yeah, I mean, basically GBTC is a trust, which, you own units in a trust. You don't have the same sort of tax benefits that you would in an ETF wrapper. GBTC was supposed to also, GBTC isn't necessarily owning the crypto on balance sheet. They're trying to replicate the Bitcoin and Ether, because they have another batch of crypto trust out there. They were supposed to be applying for an ETF wrapper. They said they were committed to doing so. I haven't, maybe Olga's seen it, but I haven't seen their application hit yet. That would probably make 13. But ETFs, one of the benefits, why folks think, why there's such a fervor around ETFs is because there's more tax efficiencies. It's just more easily accessible. You can get a pricing at any point in the day as opposed to just the end of the day. And GBTC is also kind of facing some challenges itself. It used to enjoy, it is used as a part of an arbitrage play that allows for some of those high yield crypto lending platforms. So GBTC used to trade at a premium to Bitcoin, which was one of its hallmarks, not necessarily spoken, but just a fact, because there weren't many, there wasn't much access to a product like that. It's still one of the larger crypto products out there, and gives folks some exposure to crypto, but it's not as easy as you would have if you had an ETF wrapper. So from what I understand, they're still trying to do something, but again, we'll see how that plays out as far as ETFs go.
And so in terms of, so I recently talked with them, and like Mark said, they are planning to do an ETF when an ETF is feasible, but right now they don't believe that a Bitcoin ETF will get approved, basically. So they're going to apply eventually and convert the fund, but it's not going to be anytime soon, it looks like to me. What's interesting.
It's weird though, because you would think they'd want to throw their hat in the ring, because if an ETF, I mean, this is just talking shop, but if an ETF comes to pass, you would think that they would be not in a great position, because a lot of folks would maybe think about shifting to that more tax efficient vehicle, but who knows?
Well, maybe sort of my impression is that maybe they just don't believe that this is going to happen anytime soon. Maybe they have all the, paperwork, whatnot, ready for when this will happen, but it's just, we're not there yet. What's interesting, besides what Mark mentioned about GBTC is that, so they are only open to accredited investors. So the reason why people did arbitrage on this GBTC was that, so GBTC would be bought by accredited investors, and then these investors would sell it at a premium on the secondary market to other people who couldn't get hold of the GBTC before. So this is one of the kind of intricate parts of it. But what I find fascinating is that GBTC, they're of course a huge holder of Bitcoin. I think they own something like maybe 3% of the entire Bitcoin supply, which is huge. And so this is supply that just sort of sits there. They have, it just sits there and it's never coming out, essentially. It's held captive. So I kind of find that interesting, because people look at liquidity when it comes to crypto a lot to try to figure out how much of crypto is actually available for trading and how much is not. And they look at a bunch of different buckets. They look at crypto, for instance, that's sitting in accounts that are locked and where the user forgot how to get into this accounts and will never perhaps be able to get into this accounts. And so, of course, this supply, and it's a very substantial percentage of the entire Bitcoin supply, is lost. And so that's partially why the SEC feels like there are maybe liquidity issues with the Bitcoin market, because really the supply that's being traded, it's not that huge, and it's traded between just a few, and a few whales can hold a lot of the supply.
So let's go back. There was a question that came in earlier. I'll just read most of it. Last year, RAND Europe had a white paper on the use of Zcash for illicit or criminal purposes. The authors found that the use of cryptocurrencies for terrorist financing purposes are mostly episodic rather than widespread. So I do think that is an interesting fact. And this is an aside now, this is me. I've also seen how the suggestion that it's quite highly concentrated, right? It's a small number of actors doing a large amount of the illicit work. Okay, so back to the question. As the use of digital payments with anonymous characteristics proliferates, how concerning is it that cryptos such as Zcash and Monero could increasingly be used as a vehicle for financing terrorist and complex money laundering schemes? And let me add to that before I throw it to you guys. Like, one thing that's interesting to me, given the existence of these, more anonymous cryptos like Zcash and Monero, is why do ransomware hackers use Bitcoin, right? Like one of the sort of fun, surprising kicker to the Colonial Pipeline hack was they got the money back because Bitcoin's not that anonymous. So like, why didn't they use Zcash or Monero? I don't care. Who wants to start?
I'd love to jump in. To me, it's a mystery as well. Why would somebody use Bitcoin? Because it's easily traced. There is this digital ledger called blockchain where you can see every transaction. You can see which wallet the money went into, and there are firms such as Chainalysis and Elliptic that actually can, can categorize different wallets and even figure out, who they might be, and law enforcement uses the services to get the money back. And with some of the other sort of more anonymous coins, I think maybe some feel that they're more anonymous than they really are. Like for instance, Monero, tracking services like Chainalysis and Elliptic, they are able to gain insights into what's going on with Monero. And when I talk to them, they say, if there's demand to track what's going on with Zcash, we are able to provide those services too. So I think maybe there is a perception that some of these coins can offer criminals, complete freedom to do whatever they want, but that's actually not the case.
I mean, it's interesting, right? Because sort of the fundamental point of blockchain is this idea of an open ledger, right? I don't know the technical details of Monero or Zcash or how you hide it, but like the basic transactions are there for everybody by design. Like that's the core of the whole idea. Mark?
Yeah, I mean, it's a fascinating thing because someone said to me, well, see, they cracked Bitcoin. And I'm like, no, they didn't crack Bitcoin. They basically used the technology to follow the money, which is what, investigators at the Justice Department and FBI are hired to do. And what makes it easier to do so than the distributed ledger technology, which literally is tracking each blocks created and knows where transactions are going. The only interesting thing about that case, as it in regards to the pipeline, was the fact that they got the key. That was the question to me, and there probably is a number of ways that you could have obtained it, but that was a stumble for me. But yeah. I mean, listen, the other thing that a lot of the bulls in crypto say is that, $100 bills are also used for money laundering, perhaps even more so than crypto. And
there's a pretty good case against $100 bills. Like, right, Ken Rogoff makes it. Like, why do we even have them? They're just for crime. Like, you could leave it on without
exactly. I mean, it's like the same arguments made for $100 bills and high denomination bills, but crypto, is going to have to make a use case for itself, and I think one of the cases in perversely, or perhaps not so perversely, in the case of the pipeline ransomware, was that it was tracked and traced, and you could make an argument saying, listen, you were able to find the money and get it back, and that's the value proposition in Bitcoin, regardless of whether or not the bad actors want to use Bitcoin versus some other more anonymized currency.
Somebody, the person, Matt, I won't try your last name, sorry, who asked the original question has a comment here. Can everybody see the comment? I don't know. He is mentioning the private key, as you also mentioned, Mark. How impressed were you by the investigative techniques the FBI employed in identifying the owners of the Bitcoin and clawing back the funds? It is like, the private key is like, that's the like gumshoe, right? Like that's getting the key to the safe deposit box, right? How encouraging is it that law enforcement has the technical know-how to track down the dark side fairly quickly? Oh, and Mark just answered most of the question. Great question.
I mean,
sorry, I should have read the whole thing.
Yeah, the private key thing was the more impressive component of this, again, because the technology is created such that you will literally be able to follow the money. But you could get the private key in any number of ways, including relationships, which is again what you do if you're an investigator on the FBI, or a screw up by the perpetrators somehow. Either leaving the code to the private key somewhere where it could be accessed by investigators, or having
in a drawer, like they wrote it down and put it in a drawer, and the cops got a warrant like that?
most likely in an email, most likely in their computer, most likely in a laptop, you know, so in those digital scenarios. And again, I'm just speculating here, but it was more of amusing than a real, like, oh, what a puzzle that they got the private key. But it would be something. I don't think they cracked a private key, is what I'm saying. But it is a curiosity to you know, would be interesting to see how they did end up obtaining it.
So I have a question. I think we're at the end of the questions. We have a few more minutes if anybody else wants to post one, but here's one I'll throw to both of you guys. So, you know, there is one, what's crypto going to be good for is a question I keep coming back to, right? Besides making money or losing money, which clearly it's good for both of those. And, you know, the metaphor I come back to is I'm old enough to remember the first webmail in the 90s. You know, the web came along and it was like fun and there were little pictures and whatever. And then it was Hotmail, actually, which was then bought by Microsoft. Somebody figured out, oh, you can get your email on a web browser. And it was like the first thing where everybody's like, oh, now there's a reason to use the web for normal people who don't care about the web, who just want to send messages. So I'm going to ask each of you to just like go out on a limb and say, what do you think is going to be the first killer app for crypto?
I will just say that I do not know, nor I pretend to come up with some fascinating innovation. But if you just look at the trajectory of like you said, Hotmail and email and the internet in the 90s, and just the infrastructure that was put in place to create what we have now. You know, if you ask me 100 years from now, are we going to be still using paper money? I would say probably, but probably not, right? But you know, the digital infrastructure is being created for payments and for transactions to occur at a much more, and for finance to occur at a much more rapid you know, basis. We're still using like T+.
Crypto is not more rapid though. I mean,
exactly.
like crypto is more slow.
You're 100% right. And depending on the crypto you mean, right? So Bitcoin is slower than say Ether. Ether is probably slower than.
I mean, the fact that we still have ACH and it takes 3 days, that's not a crypto, not crypto question, right? Lots of places in the world have real-time payments without having crypto.
And it is about all getting to that place where we don't have a T+2, you know, that it's closer to a T+0, that ACH doesn't take, you know, 24 or 48 hours to take place. You know, I'm not saying that crypto is the end all to be all as far as that is concerned, but I think people are thinking a ton about digital payments and a ton about blockchain technologies and the applications therein. From everything from, you know, tracking and tracing, you know, variants of the COVID-19 virus within the CDC. I'm totally speculating on that, but I'm just saying, you know, use cases could be things like that. If you think about what the blockchain technology could be versus, but also tied to you know, the currencies that run atop them. But there's you know, you couldn't really imagine that you know, we'd have like things like Slack or Zoom without having a proper infrastructure in place that is the internet to really have those things ride atop, and that's going to be what we see, I think, in the future of payments and financial markets, and that's what we're going to be reporting, which is the exciting component of this all.
So, Mark, you wisely did not take the bait in my question, which was making a specific prediction. But Olga, let me see if you will. Do you want to just guess? You know, nothing on the line, but fun. Like, what do you think will be the first killer app for crypto?
Sure. So I think the key thing here with crypto and with blockchain is the word decentralized. So the idea is that future apps will disintermediate, you know, some entities like banks or whatnot. So, you know, a lot of people in crypto dream of autonomous, you know, they're called DAOs. Basically, they're companies essentially run by software that nobody owns. So the way this might look, I found this example helpful in understanding the concept. So for instance, you have code on the blockchain that just sits there, and it broadcasts a message to everybody saying, Olga needs a package picked up and delivered to Seattle. Let's see, what is a car going from here to Seattle that's going to be driving by Olga's house anyway today, and can pick up this package, deliver it to Seattle, and get paid, certain amount via blockchain. And so the software sitting on the blockchain will find the driver to pick up my package, deliver it to Seattle, and I will pay money for this service, and the driver will get paid money for this service, and that's all done by autonomous software sitting on blockchain. I think this type of a scenario is kind of the killer app. This could apply to basically, it could be applied to trading via, it could be decentralized exchanges, it could be decentralized delivery services, it can be decentralized whatever. It just, as long as there is, it's all done via software and a matrix like, world. That's what I imagine the revolution here as being.
See, Matthew is back, so I think we're supposed to stop talking now.
Wow, that was a great session, training session. A sincere thank you to Jacob, Mark, and Olga. Watch your email for more information about Cebu's next monthly training session. Finally, if you have a suggestion about a future training topic, please email cebu@cebu.org. This concludes today's session. Thanks again, everyone.